It's going to be a data-packed week, so let's see how the Forex market will respond to this week's economic releases. It's the week ahead at exam.com. Thanks for joining us. I'm Cristina Marujos, and with me today is our lead market analyst, Rafi Boyajian. Rafi, starting with the United States, Powell talked about transitory inflation at the Fed's latest meeting. However, this upcoming week, we'll be getting the Fed's preferred inflation metric, the PCE inflation, and of course, the U.S. PMIs. What will these data sets tell us about the U.S. economy, and how might the dollar move?
Well, Christina, indeed, we are getting the Fed's preferred inflation metric on Friday. The question is it going to attract the usual attention, or are people going to be focusing more on economic growth side of the story? So that's why potentially, Monday's PMIs from S&P Global, which give an earlier glimpse into what's happening with business activity. It comes out much earlier than the ISM PMIs, for example. This might provide some vital clues. And also on Friday, when we get the PCE inflation numbers, we also get some consumption data as well. So this might attract maybe the equal amount of attention, because we have some concerns about consumer spending in the US. And so any slowdown might trigger some panic, some renewed inflation, some renewed recession fears. So even though Powell, in his post-FOMC meeting press conference, he kind of downplayed the risks of a recession, but of course, any anything contradicting that would definitely raise concerns, and we could see the US dollar come under renewed selling pressure. Now, when it comes to the PCE inflation data, these are expected to be, pretty good, because we had, of course, recently seen an uptick in both PCE and CPI inflation numbers. So we are expecting the headline PCE data to moderate slightly to 2.4%, and for core PCE to ease slightly to 2.6%. Now, of course, these are both still above the Fed's 2% target, but nevertheless, if we do get such numbers, and we don't get anything or potentially we get some decent consumption data as well, the US dollar might extend its latest rebound.
I see. Now let's cross into the United Kingdom. It's going to be an extremely busy week for sterling, as we'll be getting the latest PMIs, CPI, and retail sales numbers. Now, what are these reports likely to show about the UK economy right now, and how might the pound respond?
So it's a little bit difficult to see what's happening in the UK economy, because yes, the data hasn't been too bad, but it hasn't been that brilliant either. And on top of that, we've got inflation that's rising again. So we do still have this ongoing stagflation concerns about the UK economy. Nevertheless, that hasn't stopped the pound from rallying against the US dollar. One of the reasons that's kind of, that puts the pound in a somewhat better light against some other majors is the fact that the UK will probably avoid Donald Trump's trade war. Let's see how this lasts, though. I think next week investors will be looking very closely at the CPI data. Now, of course, we are expecting inflation to rise further above 3%. The Bank of England has said that they expect inflation to peak at 3.75% in the second half of this year, but of course, still any stronger than expected numbers would potentially, dampen rate cut expectations. But the other thing investors will be focusing on this week is the budget update from the UK's finance minister. Now, Rachel Reeves has come under a fierce attack because we have a Labour chancellor who's actually raising taxes and making some dramatic tax cuts. The focus this time around, of course, the main budget was in the autumn. This is sort of like an update to that. We're going to be getting not so much tax increases, but spending cuts. And this is something which, although might not be too popular with voters, it might be good for the pound, or at least maybe not so much for the pound, but for the economy, because the Bank of England might be more willing to cut interest rates when it's being complemented by spending cuts by the government, which are disinflationary. So it's hard to predict how the pound will react on the day, because both the CPI and budget are on the same day. But definitely, I think the pound will be in focus over the coming days.
Absolutely, as well as the euro, which has been facing some weakness recently with German politics and, of course, Trump's tariffs creating a lot of uncertainty. How do you think this week's Eurozone PMIs will affect the single currency?
So the PMIs, of course, are pretty important for the euro area. We haven't seen very strong growth. There's been some slowdown in the last couple of months. Although overall the eurozone economy has been performing better than anticipated, so we might see a slight pickup in services activity for the month of March, and maybe even manufacturing might rebound. But it's difficult to be too sure, because of course we do have tariff fears dampening business sentiment. On the other side of this, though, is the fact that, as you mentioned, we've got the German stimulus on the way. So we have to see just to what extent one is going to offset the other. But I think either way, the ECB will probably slowing down its rate cuts. If we get some worse than expected data, though, that might pressure the euro, because investors might boost the prospect of a rate cut at the next ECB meeting. Otherwise, if we get some decent numbers, and then on the back, of course, of the lift the euro received already from the Germany's fiscal measures, we could see the euro, making some further gains against the greenback.
And finally, Rafi, let's look at Japan. We'll be getting the latest Tokyo inflation numbers. Will this report solidify rate hike expectations by the Bank of Japan in June? And where would that leave the yen?
So we had the Bank of Japan meeting in the past week, and we didn't really get any concrete signals from Governor Ueda, nor from the statement. So the Tokyo CPIs are always kind of important, because they come out, a couple of weeks before the nationwide CPI numbers. So we get some sense of where inflation is headed. Now, of course, we did see a bit of a dip last month in the Tokyo CPI, and this was confirmed in the nationwide numbers, and we're probably going to see core CPI for the Tokyo region staying unchanged at 2.2%. So this might not really tell us much, and in fact, maybe investors will be looking at the summary of opinions of the BOJ's meeting in the past week, which does come out next week. And if we get some clues there that maybe some board members are more willing to raise interest rates sooner rather than later, because of course Governor Ueda in his press briefing didn't really reveal much, and he was also not quite as hawkish as many had expected. But if we get a more hawkish summary than what we got from the meeting, potentially this could be positive for the Japanese yen.
I see. Rafi, thanks so much. This was The Week Ahead at XM.com.